So, why can stocks be great investments? I'll start off by making it clear that investing in stocks can have both pros and cons, as they can be extremely high risk and high reward. For instance, penny stocks, which tend to be any stock that costs less than about $5 per share, they're incredibly high reward, but they're high risk, meaning that you're at a very high risk of losing your money. But there is that chance that you can also strike it really huge. Stocks, you'll hear the word volatility a lot. Stocks tend to be highly volatile, meaning that they're quite unpredictable at times. They have the potential to rise dramatically one day and then crash the next. So while you can make educated guesses as to how well a stock may grow over time, if you look at a company's financials per se, um, there is no perfect way of predicting how a stock will actually perform, which makes them risky investments. So if there was a way to actually predict how a stock would perform, everybody, including myself, would probably be filthy rich by now. And as they say, hindsight is always 2020. But while there is that risk factor involved, stocks provide very high potential returns. Um, Over a longer period of time, stock investments tend to bring pretty great returns to an investor. And at the current stock market growth rate of about 7%, according to the average, an investment of, say, $10,000, for example, right now would become somewhere around $20,000 in roughly 10 to 12 years. So that is the power of long-term investments in the stock market, and I'll sort of dive deeply into this a little bit later. So now that that's out of the way, when we talk about inflation, we talk about money losing its value over time. So although many of us weren't actually around to witness it, there was a point in history when a candy bar was a cent and the cost to see a movie was just $1. That's pretty unimaginable. Now, a candy bar can cost anywhere from $1 to $2, and seeing a movie can cost 20. Letting money sit as cash, it can really erase its value within just a decade or two. According to the current average inflation rates, your money will lose anywhere from around 1 to 4% of its value every single year. But as you see in this chart above, it's been on the higher side. For example, in 2018, the inflation rate was about 2.44. That's pretty ridiculous. If you put money into the stock market, your money can grow exponentially without actually having to worry about inflation completely eroding away your savings. So, like I said, just don't keep your money, under a mattress somewhere to let it just sit and you'll use it in another 10 years. Don't do that because then, although while now you may be able to buy, a nice used car in 20 or 30 years, that same money you'll only, be able to buy maybe a high end pair of sneakers. So, investing in stocks, as you'll see in this graph right here, it tends to bring the greatest returns in comparison to other types of investments. So, for instance, as shown over here, compared to government bonds, treasury bills, or even index funds, which isn't really shown on here, but it's still important, stocks are deemed the greatest wealth accumulators. Um, I mean, it's pretty self explanatory. The graph above it demonstrates this over about a 90-year period of time. So taxes, this is really important. Taxes, nobody likes paying an ungodly amount of taxes. It really stinks to watch your hard-earned income be sliced into thirds or fourths and taken by the government. Investing long-term offers a much lower tax rate for what's called long-term capital gains. Now, if you hold a stock for longer than a year, you're eligible for these tax deductions depending on your annual taxable income or your marital status. So as the chart shows here, if you're young, if you're a single investor who makes up to $40,000 a year, you're being taxed 0% as opposed to say 12% ordinarily. So take advantage. I implore you, use the stock market as a source of disposable income. Except this time you can keep all of your earnings. And now planning for the future, it's never too early to save up. Planning on retiring early or saving for a college fund and investing's for you. If you plan to begin investing as a young adult, by the time you reach full adulthood, you could be looking at an amazing pool of wealth. Letting an investment sit in the market for 30 or 40 years has really great potential to grow. And your future self will really thank you for it. It may not seem like much now, as most of you are in high school, but once you're in the workforce, you want to get out of it as soon as possible for sure.